Hey guys, coffee's in a really compelling position here. Now, the trend is definitively down. It's just, coffee is sort of crashed, frankly. Now, it's not at an ideal level from a long term perspective because it's just above uh, longer term what could be support. I'd have a really hard time selling coffee here because it's so deep in the hole and I realize the trend is down. So I am going down in time frame and trying to trade lightly from the long side, expecting or hoping for at least a little bit deeper rotation up into this extraordinarily vertical range.
Good morning, all. I guess that's the jobs report, and this is all the noise around that. Gold tank spiked lower. Now it's trading back into near its session highs. Stocks spiked up. Now they're spiking down. So I'll just stand aside for a bit here. I don't see anything super obvious. To me,
Let me show you this. This is the longer term view. This is the first quarter auction. Now, so far, the first quarter auction has a pretty narrow range. That's not too surprising so far. I wouldn't be surprised if we haven't seen most of the range of the first quarter auction because the range of the fourth quarter auction was so extreme, and you usually get sort of, it fits in with the constant development phase of initiative to balance. And I thought this would be a more balanced quarter than the last one because the last one was so extraordinarily vertical. Now, obviously we're not quite halfway through, so I wouldn't be surprised at all to see more upside at this point. I think, if we get below the high volume node of this quarter, then that opens up other things, a million other things, no point getting into now. As far as today is concerned, yesterday we traded in this extremely narrow range for a mind-numbingly long time. Most of the trade yesterday, time-wise, occurred really in this area between 46 and 40. It was, we talked about it before it began happening, so I wasn't overly shocked. The immediate downside key reference areas, and we're actually, the ES is tanking at the moment, is in here. Below this level, it opens up, if you get below the high volume node from the fifth, then there's really decreasing volume on the horizontal scale until you get down around 2296, 3296, 3288. But we're testing this high volume node from the other day right now. Morning, all. Let's see here. Okay, I posted this in the forum, these levels. This is the NASDAQ. And if we take, what is essentially yesterday's trade and today's trade, is clearly one auction going on. So we'll combine that now. But your levels are the same.
It's not too surprising. We're trading right here below this high volume node, below these lows, but above this level. We're in somewhat of a narrow range chop fest. This is a digestion phase. The benefit of the doubt would be that we have an upside resolution to this balance to eventually. The surprise in my mind would be if we close below 93.28. And the ES, we flirted with the low extreme of the balance area from the other day, and I'm bungee jumping back above it. So again, I think the benefit of the doubt goes to the upside in stock index futures. And let's look at this. This is interesting as well. It's early, right? Not quite to 10 o'clock, but close. And breadth has come in a healthy way, I should add, in terms of what you would expect. We had 3 extraordinarily strong breadth days. So this is the pause that refreshes in a bull trend. So what you expect now, if indeed nothing has changed, is that the downside below today's low should be relatively limited, and that in the next day or two, you're going to make higher highs. That's been the pattern since the October low, with few exceptions, the most recent exception being the top over here at the end of June. Gold is also, interestingly enough, acting quite well. And I say interestingly enough because of the strength in the dollar and the strength in equities. We talked about correlations the other day. You have to be very careful about leaning on things that appear to be perfectly correlated at any given point in time, because those correlations tend to be fragile in some cases. This is one of those cases. Hey guys, good morning to those that are just getting in. I want to have a little trade lesson here, and it's real time. A couple of things I want to show you that I think are really important that sometimes get missed because I'm constantly broadcasting the stock index futures on my screen at the expense of everything else. Is because frankly it's impossible for me to show more than one screen, but it's important for you guys to realize that I am certainly trading other stuff all day long, and I encourage you to as well. For instance, today I have already traded live cattle, took a loss. I've traded crude, took a loss. I've traded the NASDAQ and took a loss. All of those are small losses. It's part of the business. Long goal, that's working well. What else do we have on? I'm short the British pound, giving some of that back, but I have a lead in that. But what I want to show you today is a day trade, okay? And it's a day trade in a contract that not a lot of people trade, period, and really wouldn't think to day trade. A lot of times the best day trades you can take are contracts that you wouldn't typically think as day trading contracts, but because of market condition, they're ideal for a day trade. I mean, if you have no intention of ever carrying a contract overnight, much less carrying a contract like coffee overnight, there are times when contracts like coffee, and it's a perfect example because it's a soft, it's rather esoteric, at least is the perception of most traders, and most traders, especially day traders, are never going to look at coffee. They're never going to consider coffee as a day trading vehicle. And quite frankly, it probably shouldn't be considered a day trading vehicle, except in certain circumstances. Now, coffee is in a clear, obvious downtrend. It's also approaching a downside extreme on an intermediate term level. Now, trading auction market concepts
requires us to recognize market condition. Part of recognizing market condition is not only, or a nuance of recognizing market condition is understanding how mature that condition is and the probability of it continuing in the time frame that we want to take a trade. So coffee has just been as vertical as it can possibly be for a month to the downside. It's had very, very little pockets of rotation. So coffee came in today, and I posted this in the room, in the forum this morning. I posted it, and this was at, you can hover over this and you can see I posted this at 7:34 a.m. that coffee's in a minor balance area just above critical long-term support. So this was posted in the room, and I have talked in the past and highlighted how you can trade these contracts intraday. So in my mind, as I was doing the report, I saw this and was very, very eager to look at it after I got off of that report, which is what I did immediately. So the short story is I'm looking at this. Now, as a day trader, do I want to go short or long this market? Well, frankly, it sort of depends. Now, coffee was trading, when I posted that, coffee was trading right in here. So you had extremely low potential risk because the low, if you took a long in here, your maximum pain stop had to be just below the previous day's low. Now, what would your target be? Would you be going long here expecting coffee this to be the all-time low in coffee for the next 6 months? Well, it could be, but the probabilities are it's not. You know, the probabilities are that coffee would maybe be doing what it's doing now and chop around. Now, it could still go higher from here, but if you're buying it in here, what you're looking for is a good reward to risk trade, a trade with a high expectancy. And that's the decision I made. I said, okay, I'm going to give this a shot. So what I was looking at, this is the 30-minute view here. And so when I was able to turn my attention to coffee after I got off the report, coffee was trading in this area, let's see, right in here. So it was off its lows. There was a little bit of hope that maybe it was going to, trade higher and test or spike through this level. Okay, that was the premise of the trade that I took. So I came over here and decided, okay, I'm going long. So I bought one at I bought a contract at 98.10, and then I put another order in to buy one at 98 because coffee tends to be choppy and rotational. So I got filled, and I put my initial stop just below this level right here at 97.40. I put my stop, I think it was at 97.38 or something like that, because that's as much risk as I wanted. It's as much as I was going to take. And I put, and this was just, absolute luck. I just sort of picked a level above here that I would be willing to get out of one contract. I put it at 99.85. We happened to top out at 99.91. That was luck. There was no great calculation there. I just wanted to take advantage of any spike above that obvious level. When that happened, I placed a stop below this, or actually probably in this volume, because I didn't want it to, if it's going to take off, I was going to let it, but I didn't want to give up too much of that gain. Now, if you look at this from a reward to risk perspective, if my risk was here down to here about 38, and my average price was about 98.05, then I didn't quite get 3-to-1. And this isn't something that I did prior to this trade. What I was really looking for was a spike above this level. I felt like the trade had a greater than 50-50 chance of working
And as it turned out, I did better than 2-to-1 on my net position. But the point of this whole thing is that there are opportunities like this in contracts every single day that are not the usual suspects that we trade: gold, crude, the stock index futures. You can have wonderful day trades in some of these other contracts that are much higher probability than trying to catch 10 handles in the chop fest that is the stock index futures on a day-to-day basis. So this was, this is a textbook example of a day trade in a contract that many people would not be considering, but trade beautifully. These auction market concepts work across all degrees of time all the time. Now, I'm showing you a winning trade, but I want to emphasize, I'm going to say this again, I said at the beginning, I've also taken losses in live cattle, the NASDAQ, and crude today. So not all my trades work, trust me. But I wanted to show you this example of a contract that most people would not think of as a day trade. And this one just happened to work. Hey guys. Okay, here we are, sort of disjointed. And this to me says digestion. Now, we could be setting up, dare I say this, another temporary top if the NAS or the ES, right now looks like it'd be the NAS, goes to a new high. You certainly have, you're going to have significant divergences if that were to happen today anyway. And that doesn't mean the others don't catch up, because the NASDAQ has been leading this market. But you can see how weak the Russell is, and the Dow is not quite as weak as the Russell, but close. So to me, this so far today just looks like a waning of the incredible momentum that we've had off the low a few days ago. And this is just balanced digestion, two-sided trade that's normal for all markets. The message here, same message I've had pretty much this week, is just be really careful, because it's, the intraday trends are very short-lived, truncated. This, whether you go long, you go short, it snaps back in your face in a nanosecond. So I would be really patient about looking for trade setups. And in particular, this time of day is usually a little tricky. Between now and 2 o'clock, things can go really, really quiet. Maybe after 2 o'clock, there's a chance for some sort of trend establishing, depending on where we are. Guys, we are heading into the final stretch of the week, and we have significant divergence between the NASDAQ and the other three primary trading. It's been sort of a rotational grind a little bit. The last hour has been direction. That's it. Here's the ES. Now the ES is trying to generate some sort of momentum below. It was sliced through slightly. The high volume node, below today's low, really the most significant level below is the high volume node from the 4th. That includes a little bit of low back session prior. Now, obviously, it's questionable whether or not we get there. One key is we're not going to, the ES is not going to trade that low unless the NASDAQ takes this low out. If the NASDAQ takes this pivot low out here, then, okay, maybe there's a sharp decline in this area. On the other hand, if the NASDAQ now were to turn around and take out this 30-minute high, then you could have the obligatory Friday ramp up into the close.
Hey, Ron, is this better? Apparently my mic was garbled. May still be garbled. Testing. It is garbled or better? Okay. What I was saying before, I guess that I garbled, was if the ES is going to trade lower into the high volume node that's down in here, it's not going to do it unless the NASDAQ takes out this low. And it's testing it now. That was the gist of what I was trying to point out before. But NASDAQ really needs to take this out if there's going to be much more downside. Otherwise, then we may be setting up for that that ramp, that reversal ramp that we've all come to know and love. Hey guys, you have a really good reward to risk longs here. I'm trying longs against this little low. The reason for that, breadth is, we have lower price, we have higher breadth. Now, it's not really, you don't really have a divergence in order flow, but you're seldom going to get everything in the world to line up. But if this low holds, you could get a pretty substantial snapback. You also have the histogram down here, the momentum waning against this area in here. So you have a great reward to risk here for a day trade. Now, if I'm wrong and they take this out, they may crater the thing because the ES came right down to the level that it had to hold, and so far it's held too. So that also goes into my decision in here. Here's the picture I was showing before, and this is a significant part of my decision to go long, because the NASDAQ came right down to this level and held it. It's held it so far. So at this point, especially this late in the day, if I get taken out here, then I'm done for the week. It's been a good week, been a good day. I've been really patient, so I like the trade. It's well thought out. It may not work, but I think it's a good trade. I had a large degree of context. I think it's a rotational day, period, anyway. So that's the complete rationale behind my thought process in going long. Guys, I'm gonna look to take part of my position off around this 330 level. Yeah, that's just a better part of valor on a Friday afternoon. I like the way the trade is working at the moment. So if I get taken out, if I'm fortunate enough that it spikes up into there, then I'll just put my stop at break even, put my feet up, and I'll see what happens the rest of the day. Guys, my stop's at break even on this thing. It's we have 20 minutes to cash session working. I'm not going to take a loss at this point on this trade. For those of you that may be heading out, have a great weekend. I'm going to be here. I'll stay around until 4.
since I'm doing other stuff anyway. I'll come back in and say goodbye then. But those of you that may be taking off, have a great weekend, and I'll see you Monday. Guys, that's going to do it for me. Have a good weekend. I'll see you all on Monday.